What's going on? Yeah, good game for MSU today. Hey, Clarence, how you doing? Who else we got in here? Hey, Austin, what's up, baby? Hey, Mo, what's going on? Mr. Livingston, how you doing? Juan Bagaya, what's up, baby? Where you guys all coming in from? Reef, what's happening, man? Chris, what's going on? All right, all right. Good to see everybody in the house. Good. Appreciate it, guys. Danny, how you doing? Maury, what's up, man? Federico, a pleasure. Rolando, hello. ¿Cómo estás? Hamza, how you doing, my friend? Awesome. It's a pleasure. Everybody ready to have a little fun. It's Sunday. There's no football on today. That means you got nothing to do but do this. And that's nice, right? Sunday's your good best day to get stuff done. Hey, Maury, how you doing? Michael, what's up, baby? Cool. Well, it's a pleasure to have everybody. We got a lot to do today, so I won't beat around the bush too much. We can always chit-chat at the end. My business partner, Josh, will also be on here in the question box. So if you guys have any questions in the middle of the webinar or you can't find something, you know the deal. Josh will come in and answer any of those questions. He's been with me for many a moons. He's a good developing trader himself, and he works for our company. And so you guys are in good hands. Be gentle with them, and let's get this little pizza party started. It's BYOB, but we got a lot of stuff to do. And this is awesome that we're doing this on Sunday, because Sunday's a day to get your watch list together. I don't know if any of you guys are new, just let Josh know, because this might be, we might have to send you some beginner stuff on charts and stuff. So if you're just brand new and you've never been to one of our webinars, just type it in and we'll make sure to kind of send you at least some, beginner webinars that we've done before that'll kind of get you used to some of the patterns and things that we trade. For the rest of you guys, you guys have been with me for years, and so you know the drill. You know how we like to do things. And let's get started. And dude, we're gonna have a little bit of fun here. So let's talk about how to build an effective trading watch list. All right. So a trading watch list, why is it necessary? A trading watch list is the homework that you do at night to get ready for the next day, right? So we got Sunday, it's the Sabbath, it's game time. We don't even got football on, so we've got nothing to do but get our work done. A trader's work is done way in the after hours of the market. The trading day is just a small part of our actual trading career, all right? When the trading day starts, we're just hitting buttons. When the trading day starts, we're just hitting buttons, and we're executing a plan that we have come up with well in advance of what's going on, all right? A lot of times, especially with new traders, we make the mistake of turning our computer on, turning some scans on, hopping into somebody's chat room, and then we just start pushing the buttons. Well, I would say about 5% of my actual trading is done during the market hours. Everything else is prepared way in advance. The game starts way before the market opens. And that's what we're going to do today, is talk about that. So the agenda of today is, why we need to have a proper watch list, different types of watch lists to have, right? These are the list of tickers you're going to trade, and then we're going to figure out how to trade them, right? Using market sentiment to base your watch list. So like the things that you would put on your list of stocks to trade are going to vary depending on what's happening in the market. Are we in a bullish scenario? Like, are we in an up run? Are we in a downtrend? Are we in some type of consolidation zone where the market might be up one day and down one day? the 3 different things that we have is going to change what exactly we would put in our watch list. So that's going to be really, really important, right? What's exactly going on with the big picture of the market. Then we'll talk about the top 5 mistakes to avoid. How we build these bad boys, right? What's our criteria for picking stocks to put on these lists? How to refine your list pre-market. So there's 2 different waves of homework that we do, all right? You have your nighttime homework that happens way before the market opens, right? Monday night, Tuesday night, Wednesday night, Thursday night, and then Sunday night. Then the second part of how you build out your trading day is what is happening pre-market. When you get to that computer, say an hour before the market opens, what do you do in that 1 hour? Like, how do you fine-tune your nighttime homework, but also add in for the possibilities of new things that may develop that we need to add in? Because the thing is, a lot of times we can do our homework at night, and then there's news out in the market in the morning, and all of a sudden all our nice plans, why are all our nice plans thrown to the shitter, right? And so then we have to kind of regurgitate. Every single day in the morning, there's stocks that have PRs out or some type of fresh earnings out, some type of fresh news out, and that becomes important. We got to add those trades into our watch list because, you know, in the end, we're in the business of trading momentum. We're only as good as the stocks that we trade, right? So if our watch list is junk, what is going to happen during the trading day? We're probably not going to have anything good to put on our list. So that's going to be huge, all right? Now, primary versus secondary watches. You know, we always have backup plans, right? There's stuff that's ready to go right now, and then we have to make a list of stocks that are hot, but they might need a day or 2 worth of work, and then we put them on the list. Then we'll talk about some tips and stuff to get this stuff going. Remember, at the end of the webinar, I'll give you a special kind of bonus of some presents that you guys are going to like. For those of you guys that don't know us, I'm the head janitor of this company. I've had this business now since 2008. Man, it's been a wild ride. I run this business with a handful of former students like Josh, who showed a lot of potential, and I've hired them aboard to moderate our chat rooms and help me with classes. And I got my 3 knucklehead childhood best friends that work with me also. And we got a nice family business going. I've been trading for a long time and spoke all over the world, from Tokyo to London, you name it. I've been in there doing seminars about my life's passion, which is day trading stocks, right? Day trading and short-term trading. I've taught thousands of students how to do this while I trade in front of them every day. So just like we're doing a webinar right now, you know, I do one every single day and talk about the markets and what I'm trading and what I'm seeing. I use a momentum-based trading style. So your watch list that we're going to learn today is based on what I like to do, which is to trade heat, right? What are the hot stocks that can get me, right, big pushes in terms of an intraday basis? Now, for some of you guys, you may be more into longer-term trades. My mentor, Paul, who does our part-time trader service, he does longer-term trades. He holds stocks for a week, 2 weeks, 3 weeks, 4 weeks. And so his watch list would differ in how he makes it because his time horizons are longer, right? When you're doing really short-term, 1 to 2 to 3 days, right, you're looking for the biggest amount of push in the shortest amount of time. But I like the style that I trade. I've tried them all. You name it, I've read the type of books, tried the type of classes. The way we trade, I think, is the best because it's ideal for people that have retail accounts, right? People that are trading, that are not trading millions of dollars like in a hedge fund, but people that are trading smaller amounts of money that are trying to grow it, right? They're trying to get income, but also build for wealth, right? So your short-term gains, that's like your money that you live on. And then, of course, building for the future, which is your wealth generation. So who are you? Well, type 1, if this is your first webinar with me and you're brand new to the trading style or struggling, this webinar is going to be great for you. The second type of person that usually we're going to come across is somebody that's been with me for a while or has been more advanced to trading and needs a little bit of fine tuning to get where they need to go. So you guys let me know if you have any, watch list issues, or make sure to ask during the question period. I'll make sure to go through everything at the end if I don't cover it. And then, we got Josh and Nick on the side probably peeping at you guys right now, all sorts of creepy stuff. And so they can help you if you need an answer right now. So the basics of watch list, why we have a watch list in the first place. It helps eliminate the noise of the market, right? Define stocks that fit your trading style, provides you with the criteria to find an edge, right? There are different types of watch lists that we have. I'm going to show you the software and different softwares you can use to manage it all, right? But there's different types of watch lists to have. Number one, you have to always be watching the market, right? So like I have 4 screens going. You don't need 4 screens, but you need a portion of whatever screen you're using to actually take a peep at what's happening in the general market, right? What's the S&P 500 doing? What is the NASDAQ doing? Is the market going up or down? Because that can change how you trade on an intraday basis. I use a handful of ETFs to monitor the market, and if the market starts to speed up or down, I can even use those as a trading vehicle. I use a momentum-based list of go-to names that I flip through at night that are like the hot trenders of the market. I always keep those on a list. So I'm always scanning for new names, but I always have a handful of stocks on a list that I trade all the time that I want to always keep an eye on, because in any given market, like right now, there's 8,000 probably stocks in the market. Probably only a few hundred of them are really worth a darn to even trade on any given day, right? There's stocks that are trending, that have the volume and the liquidity that you need. Now, I make 2 types of lists, a swing list and an intraday list. A swing list means I'm looking for stocks that can move for multiple days, right? A stock that's coming out of a pattern or about to, that has the potential to, say, go for a week. Then I'm also making a secondary list of stocks that have already broke out, stocks that are moving right now that I can trade tomorrow or in the morning, right? So we need 2 different types of lists, right? Our longer term plays and then our shorter term plays, because oftentimes, right, they're not going to be one or the other. Then we'll talk a little bit today about using your watch list to help with defining market sentiment, right? How to check the stocks that show up on your list to get a gauge of really what's happening underneath the hood of the market. A lot of times in trading, you have your market indices, like you have your S&P 500, or you have your NASDAQ or your Russell 2000. Well, when you look at just a general index, what often happens is it can mask what's happening underneath the hood of the market, because a general index is just controlled by a handful of stocks. If Apple moves up 10% tomorrow, all the indexes will show like, the market had this monster day. But maybe every other stock has been going down. And so it ends up being, a misnomer to just check the index to see how healthy the market is. We need to get a gauge of market breadth and how many stocks are breaking out versus breaking down, which is key. You'll see the true health of a market when you measure the number of stocks that are breaking out versus the number of stocks that are breaking down. And it's that ratio that will really tell you how hot the market is. Because in general, we don't need an up or down market. We need a stock that has stocks breaking out or breaking down, depending on whether you're long or short. So top 5 watch list mistakes to avoid, right? This is something that gets us in a lot of trouble. Throughout my trading career, anytime I've gone into slumps, and usually what happens with the slump is like they come in, they're so debilitating, right? But they come out of nowhere, but usually the signs of the slump are well in advance of the actual trade. So, what often happens when, we're trading bad and we don't notice, but we start doing these things well in advance, is, we stop doing our homework. Our results are a determination of, right, our processes and the amount of preparation and homework we do. And when we start to lax on our preparation, it may not lead to bad trading results the next day or the next day, but what happens is it starts to compound. The more days you skip your prep, the more days you skip your homework, then the more likely, right, you're going to start to unravel at certain points. And so what a lot of new people do especially is they don't do the right amount of homework in the beginning of the day, and then they start to scramble to get stocks on their list. And they start adding stocks or tickers that, maybe a friend suggests or somebody that they know. They add a ticker just based on the fact that it was up or down a lot the previous day, right? Everybody's chattering about XYZ stock. It's up a lot. Let me put it on my list. But that stock may not actually fit the profile of what you like to trade or how you trade. Having a cluttered list, right? You just have too much junk. You're going through and you're just grabbing pieces and stocks from everywhere. I used to do this all the time. I would read like 10 different stock blogs, and you can go on the Twitters and the stock twits and chat rooms, and you start getting like random tickers from different places, but they don't all fit your style, right? They're 10 different styles of stocks. And so what happens is you get this list and it's too big and it's cluttered, and there's not a rhyme or reason to how that list is going to move, because you've kind of taken, inputs in from too many different places, right? You don't have a cohesive strategy that you're marrying to your stock list. You have too many tickers, right? So you're unable to focus on the best. When I'm making my list, I may have 20 stocks that I get at my nighttime homework, but then what ends up happening is before the market opens, I've got to narrow it down, right? I got to narrow it down to a handful of my favorites. So like by the time, like say 9 o'clock hits, right, I've taken my 20 that maybe I found, and I'm starting to just cross off junk that I know I'm not going to trade. And I really focus that list down to maybe the best 6 names or 8 names. If you're brand new or you're trading a much smaller account, then even having 6 to 8 names is going to do you no good. You may want to just focus on a handful of prime time opportunities and just sit there and wait for the right opportunity. The one thing that happens when you have too many stocks on your list, and you guys have probably seen this, let me know if this has ever happened to you, right? You have like a nice list of stocks and you miss some of them when they break out, right? Like a stock does XYZ pattern and it's one of your patterns and it's gone. And by the time you see it, you're like, fuck, that was on my list and I missed it, right? And that's the worst, right? Missing a stock that's on your list and explodes is like worse than taking a loss sometimes. So then what ends up happening, you end up kind of chasing it, or you do something like that. And a lot of times that can come from having too many tickers. Like we trade, at Bulls in our chat room, right? We trade quick pullback buys and ORBs and these type of patterns, right? For those of you guys that have been with me, Mikey, you know what I'm talking about, right? How many times did it happen? Like we have these handful of patterns we're watching, and then we missed the ORB, or we missed the pullback to the 9 EMA. And the reason that can happen is, right, we're unfocused. We don't have our watch list focused into the right names, and so then they start to go without us. And that's hard, right? That stinks. But if we narrow it down, you're not going to miss them. Another mistake that people make is they ignore market conditions in relation to the follow through of your setups. For example, like what was it? Not this last Friday, but the Friday before, right? The market got dusted. The market got dusted 2 Fridays ago, right? It was down 400 points or whatever it might have been. And every stock was just tanking throughout the day. But like when I was grading some of my new students' trades, and granted they're brand new and so they're on the simulator, but I'm like going through their list of trades and I'm like making notes. So, I have always a list of students whose trades I have to grade. And so I'm like, Ryan, shit, Bob, shit, right? And it was the first time they've seen this, but they had this hot list of stocks for the upside. Well, the market tanked on Friday, and so they were still trying to long their stocks and do stuff like that. And you know what ends up happening is you end up taking trading losses because they were ignoring market conditions and weren't able to adapt during the day. Now, the good part is for most of my students, when they do that, they're on the simulator, they're brand new, we grade the trades, now they know, now they can make a little mental note that says, I'm not going to do that again. So then the next time the market shows something like that, they're not going to make that same mistake again, right? A big part of what you guys should be doing is journaling your trades, sharing it with somebody, whether it's a teacher or a friend, it doesn't matter, accountability partner, right? Share those trades. Let them make comments on them. Get that second eye look on your trades. That's going to help a lot because you'll be able to fine tune your strategy much quicker. So how we build these bad boys? Our criteria for picking stocks on our watch list, and then I'm going to show you the scans and the software I run and stuff like that, right? Different criteria for watch lists on how you may want to fine tune your scans, right? Float. Do you like to trade big float stocks, small float stocks, right? Float is just a measure of really how many outstanding shares of that stock are in the open market, right? Those stocks that kind of move like 100, 200, 300% a day, what do they all have in common? Their floats are really, really tiny, right? And so those are, sometimes people like to trade small cap stocks that can go up hundreds of percent in a day. Some people, they like to trade a little bit smoother, more regular stocks. I like to do both, but I kind of gravitate towards the larger ones now as I'm getting a little bit older and a little bit more bald, and the small cap ones stress me out sometimes. Volume, high or low relative volume, right? Volume is the measure of participants in a particular stock. Volume measures the emotional intensity of how bad people want that stock. And when you have high relative volume and you couple that with a really low float, then what you have is, right, you have a lot of volume and a very little amount of supply in the stock. And oftentimes, if you couple that with a breakout, you can get stocks that really, really move fast, right? Almost too fast. Other criteria, did it have any type of fresh news out or a PR out for a gap or the previous day, right? Guys, stocks that are in play, stocks that have fresh news out, they move differently than regular stocks. When you have stocks that have some type of piece out on it, whether it's an earnings report or maybe they signed a new contract, those stocks are going to have an order flow of volume that is independent to what's happening in the general market. So the market could be going down that day, but if this stock has hot news out and then its chart and its technicals line up, that stock is going to do whatever it is that it wants to do because it's got a fundamental catalyst. And what happens is when you can take the fundamental catalyst and then you marry it with technical analysis, now you got the perfect storm of awesomeness, right? That's when you got, right, the supernova of goodness. That's when you get real, real heat, right? You can draw a squiggly line on a stock, right? Some kind of trend line and some little triangle and be like, ooh, that's really good. That doesn't mean anything, right? You just draw a couple squiggly lines, you're not going to make a bunch of money and do this for a living. There's more to it than that, right? Technical analysis is great, but you're just drawing a line on a stock. Yeah, maybe a stock could go up 1 or 2% from there or something like that. But stocks that really make moves, stocks that have monster volume, stocks that can move exponentially over the course of a day, a week, or even months, they have some type of catalyst that propels them. And then we're using what we know about technical analysis and chart patterns and risk management to tame that beast and ride that wave. And that's really, really important. When we're looking at stocks, does they have a history of making big moves? And do these moves hold or do they fade off? You know, a lot of times you see stocks, they got some news out, they start moving, but you see in the past, like every time it does that, it dies. You know, you'll see that actually quite a bit. You know, if you're looking at Heck, we were just looking at some, I was just doing some of my scans just a second ago, like this GBR, right? This stock always does this. See this thing that went from 183, popped to 380, had a nice gain. I mean, it's probably a couple 100%, right? And then it faded off all darn day. And it's not the first time it's done that, right? You know, when you see something like that, you know, what did it do last time? Right? Is it $1.80, pumped to $4.80, and then just died back down. And it's done this before, right? It goes up and it dies back down. So I'm curious about that, right? Does this stock actually, is it something real, or is this kind of a little pump and dump type of turd that plays a part? Because I want to be able to trade stocks that are going to hold, right? That are going to actually show patterns. That's very, very important. Is the stock making any price discovery, right? Where are the gaps in the stock or the magnets in the stock in terms of the chart that can suction it in, right? Certain levels on stocks are like magnets, right? When we think about, you know, different patterns in support and resistance, those are just magnets. And so we want to know, does this stock have room to go? What's the pre-market volume like? You know, before the market even opens, you know, a lot of times like the hot news plays, man, they're firing off like 500,000, even 1 million shares before the market even opens. You know, the pre-market starts at like 6 a.m. You know, nobody's going to wake up that early, right? But they start to move a little bit pre-market. The volume starts to come in. That's what creates the gap. So we want to know, like, does this thing got enough heat in the pre-pre? Where are the daily chart moving averages in relation to price, right? Does it have some type of pattern? Is it getting extended? We rank all these factors in, and then I like to, you know, give them a grade, like a tier 1, tier 2, tier 3. Not all stocks we trade will fit each of these criteria, but if you use some of this stuff, you can start to narrow it down. We're in the business of using these things to build a case and then looking for chart patterns. When you think of trading, think of it like you're a lawyer. You're building a case. What are the pieces of evidence that I must put in my favor so that this stock is beyond a reasonable doubt worthy of my time, my capital, right, and my attention, right? My attention, which is huge, right? Why is this stock worthy of my man juice? Well, it's got to fit these criteria. We are lawyers building pieces of case. Remember that in trading, guys, everything is just a crapshoot, right? You buy and sell, you win or lose, stocks go up, they go down. It's a zero-sum game. It's a 50-50 shot. Every trade you take is a coin flip. But how you take it from something that's 50-50 to something that's high probability, you start to align pieces of evidence in your favor. Why that stock is worth your attention and your capital, your financial capital, but your mental capital too, which is more important. You blow your mental capital during the day, you end up missing out on a lot of opportunity. The market is an opportunity generating mechanism. There are stocks every day that are going up, doing what we need, but we just have to focus our attention on the handful of the ones that fit what we like to do. Our A+ setups, we allocate more risk and more focus, where, you know, there's other stocks that might be B setups where I would still take them, but I may take them in less size, or I might not be necessarily putting them on the front of my list, but they're a little bit of offshoots. We always want to focus on the easiest and cleanest setups to trade, right? So how do you refine this? So this is, you know, I use TC2000. I use TC2000 to build my watch list, to do my scans, and pretty much everything else. There's a lot of charting platforms out there. There's Finviz. What are some other ones, guys? What do you guys use? There's Finviz, Thinkorswim. I hate Thinkorswim. Sinkorswim, Finviz, Sinkorswim. There's Stocks to Trade, Timothy Sykes' thing. There's StockCharts.com. TradingView. Yep. Chris Birch uses TradingView. I use TradingView for crypto. It's pretty good too. What else, guys? Ooh, StockFetcher. I haven't used that one for a long time. Cobra. All right. What the heck is a Cobra? I got to check that one out. TradeStation. Okay. Hey, Aaron, how you doing? E-Trade Pro, good. Yep, there's a lot of them out there. I don't trade at TC2000. TC2000 I use as strictly a charting platform. I'm not trading off there. I don't even know if you can. I know they got a simulator and stuff, but it's just strictly there for one reason, to have cool layouts and do my scans, and I can have like different layouts and stuff that I like to do on there, which really makes it important for organization. See, the thing with trading well is organization, right? Once you have your watch list, how can you actually make sure that you don't miss your trades, right? That's huge. And so I like TC2000 just because I can watch a lot of stocks. I can run my scans during the market hours. But there's a lot of trading software out there. Damien, I used to use eSignal one time too. It's just too damn expensive. It's like you get an $80 product, but you pay $300. And so it's good, but it's good if I used to use it, but I'm too cheap, man. I'm Indian. I can't pay for no eSignal, but it does look nice. It definitely looks nice. It's just not a lot of bang for the buck. Quest Trade. All right, Danny. Cool. So these are different things that I do every single day. So I run different scans, right? So a scan is just a filter. It's nothing too crazy. And don't let anybody ever tell you, like some trading guy tell you, like, oh, like if I give you my scans, like you're getting like some holy grail something. They probably copy and pasted that shit off somebody else, right? So don't worry, scans don't have to be anything too complicated, because we're just searching for momentum, we're just searching for patterns, and in the end, right, that's all. You can find that in a lot of places. It's more about like, what do your eyes see? Do you have a charting platform that's easy to use, that can help you get organized, but also can supercharge, what you personally like to do? I use TC1000 because my mentor told me to do it. It's not because I have any scientific research that this is like the best. 10, 15 years ago, my mentor told me to use it, and I'm a good student. So I said, you know what? No problem. Yes, sir. Right. And that was it. Now I tell my students, use this, and it works for us. So that's all that matters. So when you see this, there's different stuff that we trade. For those of you guys that are not familiar with day trading, I'll make sure to get you some kind of beginner stuff. What we do is we align all stocks on multiple time frames. So what you see here on the left is a daily chart. Each one of these candles represents one day. And then what you see on the right is an intraday chart. So this is like the intraday action of a particular stock. This is important because when you look at particular stocks, like you need to be able to, see the big picture and the little picture. When you have alignment of big picture, little picture, then what can happen is you've got trend alignment and your trades work a lot smoother. A lot of times people mess up on their intraday trades because the bigger picture of the stock that they're watching is not showing that it's going to go up. So we always start in the longer term range, the longer term view, and then we work our way down. Because if you start your way from working on your way down to up, then it's not going to work, right? So everything has to have a big picture thesis. Why can this stock run for the next few days to the next week? And then those end up being the best stocks really to day trade. If you don't have that, then you're going to crisscross your lines. You're going to play swords with your best friend. And, that's only fun if you're drinking a lot, right? You don't want to do that. You don't want to do that at 9:30 in the morning, right? So don't cross swords, unsheath them, and align them in a proper manner. That's going to be just huge, okay? So first few things I do every single day, all right? So I'm going to go through my nighttime homework, and then we'll kind of run through the gamut on how to kind of build this up. So in my nighttime homework, I need to do a handful of things. First thing that I always do, I have a list of indexes. So, I use different layouts. On TC1000, see on the bottom, you can make layouts, right? So I use different layouts for different things, okay? And you want to have different layouts for stuff because, like, you don't want the noise to catch up. So when I'm doing homework at night, I'm looking at indexes, for example. There is No point of looking at an intraday chart for an index. I need to see, I look at indexes to see what's happening with the big picture. So I have a handful of indices that I watch. Is it indexes or indices? They both sound right, right? I can never get a right answer on which one is which. But I look through these ETFs to figure out, like, is there a certain sector that could be starting to run? But also gives me an awesome gauge of what's happening with the overall market. I can not only see what's happening with the general market, right, like your S&P 500 or your NASDAQ, but I can see what's happening on smaller term sectors like housing, solar, oil, silver, gold, technology, semiconductors, biotechs, banks, China, India, emerging markets, Europe, volatility, right? These are like different things that I want to keep track of. So that might have been a little bit overboard, but these are different things that kind of make up a market. So I have a list of indices that I like to go through, okay? And I go through these at night to kind of just get a gauge of, all right, what type of thrust are we in the market? Like, what phase in the market are we? Are we in accumulation phase, a run-up phase, a distribution phase, or a rundown phase? In simplistic terms, you know, all that means is, you know, is the market, right, in a bullish phase or a bearish phase or a neutral phase? Does that make sense? And I want to know that because that's going to tell me what type of stocks I need to be preparing for. Now, in general, I always keep a few longs and shorts in case the market flips, but I need to know where to concentrate, right? Where to concentrate. Do I, out of my 10, 15, 20 names, is it going to be mostly shorts? Is it going to be mostly longs? Or is it going to be, do I need to really hunt for more news or PR plays? So like this is the NASDAQ. So what we see with the NASDAQ right now, since the end of December, we've been on this just monster trend, right? It's been on this monster trend and we've been consolidating now for a handful of days, but we're starting to break out of that consolidation. Good. All right. So we've had the last few months, the trend has been higher, right? How are our moving averages? Yeah, moving averages are sloping up for the most part, which is important. Moving averages tell you a few different things, right? Moving averages can help you determine support and resistance zones, and then they can help you identify trends on particular time frames. So your 9-day moving average, your 20, your 15, your 200 are what I use on my daily charts. Your 9 EMA is your short-term trend. So if it's starting to slope higher or lower, that's going to give us a clue. So we can just see from Friday, right? It's been sideways for a few days, right? And that tells you why and that shows also, right? The market's been choppy really the last few days. Now we're starting to kind of curl its way up. So our 9-day short-term trend is starting to move higher. That's good, right? Because we're short-term traders. Our 20 is higher. Our long-term is still flat, right? So if you're a long-term trader, right, the market is really kind of market has really just been flat the last almost year, right? Give or take. If you're looking back at the big picture, you know, we're basically at the same levels we were about a year ago, give or take. 50 is sloping higher. So overall, on a long-term basis, the market is neutral, but on short and intermediate term, right, the market is bullish. And we can see that also just from price. So that's going to be huge. So what I want to do is flip through these different indices to kind of get a gauge of what's happening in the general market. But also, as I'm flipping through them, I want to see if there's any sectors I need to really be focusing on, right? So when you go through these names, so this is the S&P 500, right? It looks very similar to the QQQs, which is the NASDAQ. I always start with the QQQs versus the S&P 500 because in general, we tend to trade more tech stocks than anything. For those of you guys that are in my chat room watching me trade all day, right, you know that, you know, a good chunk of what we do is we trade in the tech stocks because that's been really the hottest sector for the last 20 years, give or take, right, a few years in there during the tech bubble. So I like to kind of go through these to see, okay, where's the action and is there anything that I need to be looking at for extra exposure that I may not see in my particular scan. So I'm going to run scans every day looking for individual stocks, But I want to get a gauge of also what's happening with individual sectors. Is there anything that's breaking out or breaking down? For example, like if I had, if this was, say, a few months ago, right, and we saw natural gas start to break out the way it is, right? See how like in September, October, like you started to break out over here, and you got a really big run in natural gas. So what typically will happen when you see something like that, right? Typically what will happen when you start to see something like that, natural gas stocks will go up, or like certain ETFs that mimic natural gas start to go. So like I would want to concentrate and add a few stocks to my list that would be about natural gas. Does that make sense? If same thing, if I saw something with, say, oil, and oil's not doing that, but in general, like, right, if oil was having like a monster trend and it was starting to break out, I would want to add some oil stocks in. So like that's what my mentor calls like a top-down approach. We start from the big picture of what sectors are hot, and then we start to go in and find individual stocks in that particular sector, banks, so on and so forth. You guys following with me so far? Cool. So that's your top-down approach to just see like where the big picture is at. Now, on a smaller term basis, like what's ready for tomorrow? So once I go through the sectors and I figure out like where the heat is in the market, and also like where the market is truly like in terms of, right, the bigger picture, well, now I have an idea of, okay, I need to filter this down into X, Y, Z. The next thing that I want to do every single day is, I go through and I have like a liquid gainer scan. A liquid gainer scan is just a scan that's looking for momentum with relative volume that's moving XYZ percent. So I think I put the filter on at probably 2% or more with, certain volume parameters, probably about 2x relative volume. Sometimes I go 1.5, and then we're, busting it lower, busting it down by price of stock, so on and so forth. So I go through a liquid gainer scan every single day for a particular reason. I want to see what's moving right now. There's a difference between stocks that you add to your watch list on a day trade basis and a swing trade basis. On a day trade basis, we're looking for stocks that are already moving, right, or are about to move. Where on a swing trade basis, if it has already started to move, then you're already too late, right? You can't buy a stock that's already moved, say, 2-3 days in a row and add it to your longer term list for a longer term trade because you just missed the longer term trade. But as a day trader, because we're only holding for a handful of minutes sometimes, right? 15, 20, 30 minutes, an hour, 2 hours, whatever it might be. If a stock has already started to move and say it's even up quite a bit, that doesn't necessarily preclude us from day trading it because we can get in and out really, really easily, right? We can get out really, really easily using our shorter term, our shorter term prices. So as I'm going through this list, I'm looking for stocks that have broken out of certain chart patterns and then have the ability to filter down into some of the different things that I saw. Number one, like, okay, so like a stock like this, you can see like it broke out of like a 1-year pattern on Friday, right? On some type of news. So we've got a chart breakout of like multiple, attempts to break out. So that's good, right? I like to see stuff like that. Second part, right? Remember, we're lawyers. We're building out a case, right? What's the float on this? 35 million. Anything under 100 million is considered low float. It'll have the ability to make moves and like move with big range. So check, okay? What was the volume on it? For me personally, I don't like trading anything under 1 million shares in volume. It's just too illiquid. You can't get the size you want, and there tends to be a spread on it. So for me, 1 million shares of volume is a necessity. That's why all the stocks you see on mine, right? The bare minimum is 1 million. So check. What else would I be looking for? Good. You guys are starting to get it. Good, right? Good, right? Yeah, you check the sector, right? We know tech is hot. Software application stocks also in general have been hot all year. That's been really the hottest sector in the market, right? When you think about software application, right? Like Twilio, this is stock we've been trading, right, for the last like 6 months to a year. look at the run on it, right? MDB, software application, right? You can see this stock is also in this past year, right, gone up almost $100. What else? I mean, there's a million of these things, right? TTD, software application, right? Same type of deal. Like, look at the runs on these stocks. So all of this, all of these type of stocks, like, have been going on a run. So I know that when I look at PRGS, like, this potentially could be something that I want to add on my list because I have a chart breakout, I have the right sector, I have different things that are aligning in my favor, and so that's important. Yeah, Clarence, a float, anything under 100 million is considered low float. I trade higher float stuff too, but in general, I know, like, if it's under 100 million, it can move more explosively. You know, like Roku, TTD, a lot of these names that have been really moving, they've been under 100 million. So, like, if I like this, what I'll do is I just hit F. So on TC1000, if you hit F, it'll flag it, right? And so now, like, it goes on a flagged list. So as I'm flipping through them, and I flip through them pretty fast, you know, I'm flipping through them, I'm flagging names like this, right? I'm looking for XYZ pattern that may or may not, you know, have broken out, right? So like this, DBD, what do we have here? So this is stock that has been a nice trend. We have here a flag pattern developing, right? You have your moving averages curling up under it. So you've got a lot of nice stuff going for this. That is 7% move on Friday. That's awesome. Float 74.5 million. So, like, this could be something I may want to put on my list. So I flag it. So I like going through, you know, I'll go through all of these really kind of till they get to about the, you know, into the 3%, give or take, you know, depending on the market conditions. But I'll flip through all these and start flagging them. That becomes really important. Now, when you're flipping through these, you're going to go through a lot of stocks. A lot of people like to make scans to find individual patterns, right? Like, say you like to trade flags or flat tops. People will hunt for patterns for individuals, make scans for individual patterns. I don't like to do that. The reason that you don't do that, right? Why you want to go through a lot of stocks every day? The reason that you go through a lot of stocks every single day is not just to find stocks to trade the next day. That's a small portion of it. See, the more charts you go through every single day, the more in tune you are with the general market because you're seeing how all the individual stocks are moving. That's huge, right? If you want to trade with intuition, right? If you want to trade without thought, then you have to be in tune with the ebbs and flows of what's happening in the market. When you go through a lot of stocks, it's not just about putting them on a list and finding stocks to trade the next day. It's about understanding what type of stocks, and you'll do this naturally as you just go through your list. If you go through 1,000 stocks every day, you know what's going to happen? You're going to know what kind of stocks are moving. In different markets, small caps move, sometimes large cap moves, sometimes the middle ones move. In different markets, floats, different types of floats move. So when you go through a lot of stocks, not only are you making a list for tomorrow, you're finding out what's really hot in the markets, what type of patterns are working, what price levels are working for stocks. Is it under 10, above 10, under 100, above 100? The other thing that you're doing is you're giving yourself mental repetitions. See, as you're going through them on a daily chart in 5 and you're really studying these, you can start to see like what kind of intraday patterns are working. So like we trade a pattern called the quick pullback buy, right? A quick pullback buy is a pattern I've been trading for almost 10 years. And it's a very, very simple pattern. Anytime you see a gap in a stock like this, right? So like say you had, and I'm just making up, this is just one that just popped up, that's why. But say you have a gap in a stock like this and it spikes up at the open, right? That first pullback to the 9 EMA, we always keep that in the light blue. That first pullback into the 9 EMA, if I get a green candle to hold on it, right? I want to buy this and put a stop under my last low, and now I'm in for a day trade for the rip, right? That's called a quick pullback, right? So we like ORBs and quick pullbacks at the open, okay? So what happens is when you start to flip through stocks like that, you start to see the different patterns, and you can mentally rehearse how you would have gotten into them. Like this, for example, Labu. What kind of pattern is this, guys, from what we trade? Right? That's an opening range breakout. An opening range breakout is when you get a gap up, and then, right, you get 1, 2, 3, 4, 5, minimum 3 candles sideways, and then you can buy them. You're only going to hit them if it goes above, right? So that's an opening range breakout. So what happens is as you're going through these lists, guys, you are training your brain to see like what type of patterns are working, right? Is it the pullbacks? And then I always do this. Like I start to go in and say, okay, this stock was hot, but I missed it. I figure out why I missed it. Like, why wasn't I in this thing? I'm just making up a name here, right? Why wasn't I in this name? And if I wanted to be, how could I have entered it? How could I have entered it? And you want to replay in your head like, oh, well, it gapped up, then it pulled back to the 9, it started to round, right? And then it took off. And then it had pullbacks to your EMAs and different patterns. And you want to start to rehearse how the heck you would have actually got into them. And that becomes really, really important as you're going through. So I do that for the liquid gainer scan. The same thing I do is I flip them over, right? What were the stocks that went down the most the previous day? And so like this RH shows up on the list, right? This thing, and we were looking at this on Friday, right? So you can see on this thing, right? Like it gapped down and then it had just a nice shred at the open and then a little bit of a bear flag and so on and so forth. So we want to go down. We want to go down and really add that stuff to the list. So that becomes huge when we're looking at this because we got to figure out to be in the hottest movers. So RH. Now, if I have this on the list, so it already went down 21% today. Could I really even trade it again the next day? You bet, right? Stocks tend to move in groups of 3 to 5, right? Stock has one down day. There's a good shot it's going to have another one and another one, and it could keep going. So like you can see here, the stock has a big breakdown on the daily. So I want to flag this stock and put it on my list, right? Because it could potentially be a trade that I'm going to be taking for the next day. Anytime I put stocks that are on my list that are breaking down, like say on the downside, I want stocks that have really clean breakdowns. Like say this is down 17% and it's on the top losers thing, but you know, it's just kind of filtered down into back down to support. So that's not a clean daily chart, right? I only want stocks that have like clean breakdowns on its daily chart. And same thing for stocks that are going up, right? They got to be coming out of some type of pattern, and then I can come in and shred this thing, all right? If you don't do that, then you're not going to have any time frame alignment, right? Like this stock was down a lot on Friday, but it just moved down into support zone. That's not really something that I'm looking to short because its daily chart is not showing me that it's going to short. Tommy, I use different time frames depending on the time of day for short. So I want to start hopping through these, all right? So this is kind of like my nighttime homework. Now, another thing that I'll do is I keep a list of like kind of 200 names of go-to stocks, right? So, you know, most of you guys are my students, you already have this list, but, you know, I have a list of stocks that, you know, we've traded in the past that I know move well. And I always keep these on a list because I don't want to like depend on a scan for them to show up when they're ready. You know, I go. So like a stock like this is having a nice breakout, right? You know, you had multiple tests of resistance here, nice power move. See the spike in volume? So its normal volume is this white line, right? So it does about 1 million shares in volume. Now, this one's got 2.8 million shares, so it's almost 3 times its normal. 3 times its normal. That's pretty good, right? When we think about relative volume, that's 3x, right? If 1 is its normal volume, and now you're at 2.8, that's 2.8x. So 2.8x relative volume, right? It's got the liquidity I need. It's got a nice range to it. Because look, in general, like even if you have a small account, even if you're trading 100 shares or something like this, if it has the ability to keep going, if it has the ability to move $4, $5, $6, then it doesn't matter how big your account is, right? In the end, sometimes we get so pigeonholed. Like if we have a small account, we think that we want to trade, we have to only trade 50-cent stocks or dollar stocks. Well, those are also the biggest pain in the ass stocks to trade. I'd much rather sometimes trade a $50 stock or a $20 stock or a $100 stock that has the ability to move up and down. And even if I just have to trade 100 shares of it and I get $2 on this one and then $2 on that one and $1 on this one, it can add up to a big day. And you only have to trade a little bit of shares. You don't have to worry about, right, how you're going to get in or out. The worst thing you can do is have a small account and then have 5,000 shares of some turd, right, that some chat room asshole called out. And next thing you know, you're holding the bag on a bunch of junk that you can't even really get out of. And then what ends up happening? You end up marrying the thing and it's a huge turd and now your account is gone. It's much easier to just trade a regular stock that has range, right? I'm talking like dollar range, and then trade the ebb and flows of it back and forth, even if it's small size. I got a lot of students of mine that trade smaller accounts and might trade 50 shares, 100 shares of stuff, and they can still rip a couple $100 at a time because they're trading stocks with range. So don't worry about percentage terms. Think about range. A $1 stock goes to $1.10 through the day. It's only got a 10-cent range. It opens at 1, goes to 110, and it's back. It's only got 10 cents to play around. It's hard. You're not going to get all 10 cents of that, right? Because it's not like you buy the low and sell the high every day, right? We play the middle. We play the meat of the move. And so if the move is only 10 cents, even though it says it's 10%, you don't have much meat to play with. You only have a few damn pennies. But if we have a range of $5 or $10, then we have the ability to trade in between and see the patterns and just flow in and out. So don't worry about the price of a stock. Sure, we will trade $2 stocks, $3 stocks, $5 stocks. I'll trade anything I think I can make money on. But in general, don't discount, a hot trade because of the price, because it is a lot easier to grow your account and trade with more consistency when you just trade stocks that are not pump and dumps, right? Pump and dump stocks are hard to grow your account because you are beholden to the dumper, right? And the dumper is usually the first one in and the one that gets to get out at the right price. So don't get stuck in that game if you don't have to. There are other ways to trade. Learn to trade all of it, right? Learn to trade all of it. So now I get my go-to stock list. I like to flip through this every single day and start hunting for, stocks that show different patterns. And it can be any type of pattern. So like, I have this Huya stock on my list because it's coming out of, right, this trend line over here. So I'm looking for different patterns. For those of you guys that have been with me on your daily charts, we're looking for a handful of patterns. Flat top breakouts, flag breakouts, base breakouts, and an assortment of pullback buys. Pullbacks to moving averages, pullbacks to price supports. I think if you check our last webinar, we went over a few of the patterns, but those are usually, that's the gist of the few major ones. So now what I'm doing is I'm hunting for these type of patterns and I'm building out my list. As I'm building out my list too, like what I want to do is keep an eye out for stocks that maybe could show like even a swing trade. So like see something like this. This is what we would call like a base breakout pattern. A stock that's been like basing out for a long time, that's built a key resistance level. And if it kind of gets over it, right, you may have a shot at like some type of trend reversal. So when I'm looking at stocks, I'm not just looking at stocks that I could day trade the next day, but I'm looking at stocks that I could swing trade. So like something like this could be a potential swing trade. It's not really hot enough or has enough range for me to want to day trade it, but it does have a look where it could go for, say, a handful of days, and it may not give me the intraday range I want, but over the span of, say, 4 or 5 days, I could get 10%, 15% gain or whatever it might be into the next resistance point, that might be a stock that I would potentially swing trade. So I'm always looking at, two different types of things. Like this blue looks like what? What kind of pattern is this, guys? Right, so you have a nice trender here, and now you're coming in, you're having your third test. For those of you guys that have been with us for a short time, breakouts in general, you need 3 tests or more of a resistance point to break out. Good, Rolando. Good, Mikey. Good, Terrence. Yeah, so this is just a flat top breakout, right? A flat top breakout is, guys, the easiest type of breakout to identify. It's literally when you have like a kind of a trend for the last 2 months, and then you'll spend a couple weeks to a month going sideways, building out essentially a range, right? And when it takes out that range, and it's usually on the third test, that can kind of start like a new potential move, right? And so that's an easy thing to that's an easy pattern to identify. That's always the first pattern that we teach our students in boot camp class and our 60-day boot camp, because, well, not because it's the best, it just happens to be that's the pattern that's the easiest to identify, right? So I want to go through and find like all different types of patterns. So that's the gist of like kind of what I would do at night. I got go-to stocks, I got liquid gainers, top losers, and then, like there's different things that you want to run every now and then periodically, right? You want to run some trades periodically to see like what are like the hottest stocks in the market at any given moment. So like I have a 90-day momentum scan, right? These are the stocks that have moved up the most in the last 90 days. So I always flip through these like once a week to figure out like what are the hottest stocks that I should be following that I need to be putting on my list. Like what do you have over here? What the fuck? I can't even draw a circle right. What do you have over here, guys? Right, it's just that's an earnings breakout flag, right? So it's not a flag, but it's a flag based on earnings breakout, which is even better, right? So that like could be a potential stock to add to your list. So always scan through. You must once a week or even a little bit more often hunt through the best stocks of the last 90 days, because that will give you an idea of where the heat is coming in from the market. Where the heat is coming in from the market, right? You need to know like where and how the heat is coming. What type of stocks, right? Snappy chat. The D picks are back, right? Like that's a nice little pattern over here. So that's, that can be even a potential swing trade. So I want to go through these and just get a gauge of right where that heat's coming in. Very, very important. So go through that, and if you don't have, by the way, if you don't have like a TC2000 or anything like that, you can use like a free one. You can use is like a FinViz. I personally, I don't need to use 2 charting platforms, but FinViz, you can do kind of some basic stuff on it too. So like if you run a screener here, FinViz, you can do like different stuff here. So you got, like you got different kind of scans you can run in here. So you could say like, okay, I'm looking for the top gainers of XYZ. And you can even come in and do like, of the last week, of the last 5 days, whatever it might be, and like start to filter off really like what you're looking for, right? So you can see here, like you can come in and you can even scan for like particular patterns and different stuff like that. But I know a lot of our students that have been with us, just need something that's kind of free and cheap. They'll use FinViz, and you can get this going. I believe even on TC2000, they got a free version, so it'll be delayed data, but you can at least run the scans and do that. But FinViz is just another way to, you'll be able to kind of do this and get a lot of what you need out of these bad boys. Also, so you can see here, you got all this kind of different stuff here. Major news, head and shoulders, and so on and so forth. For the most part, I like to search for momentum. And then what I do from there is I like to go in and fine tune it from there, if that makes sense. So you can see here, if you hit the performance tab, you can filter by like stocks that have the best performance of the last week, right? The last month. And then like once you're in there, say you got performance the last week, then, you can come in and start to fine tune them. So Finviz is another good one. Or you can use anything else. You can probably use your broker. Thinkorswim has some good ones too. So how to refine your watch list. So now you got like all these stocks that you're, watching. How do you refine them? So I'm going to take in the morning, like all the things that I flagged, right? And I'm going to look for the top 3 to 5 names. I'm going to see if the market conditions match up to my sentiment on my day trades. Is the market gapping up? Have longs been getting stuffed, right? Had a lot of gap ups last week, got faded. I check the pre-market volume. Usually momentum names with news, you want minimum 50,000 shares traded, but the best ones are going to have more. I'll filter the names. I always want to look for stocks that are making all-time highs. Write this down, right? Stocks that are breaking out of patterns or hitting ATH, all-time highs, tend to move the best because there's no level of supply overhead. There's no level of resistance overhead, right? These are momentum names, and they have resistance levels you can't see. Check the float to the volume ratios. Going to be very, very big, right? Check float to volume. How does a stock like anybody trade this RBZ last week? The thing's a huge turd, but even turds fly when they have news out, right? So like this one showed up on our gapper list last week, right? This would have been on Wednesday or Thursday. This thing gapped up and, it was sitting around at $10, $12 all day. And it went on this monster ramp to $40, right? How does a stock do that? Well, the float on this is 7 million. See that? On your T2000, if you right-click it and hit Edit Toolbar, you can add the float button. Just hit the plus, and then you can add it. So you got float of 7 million. The volume on this was like 7 million. So the whole float was turned over, right? Every available share that was around was bought up. These things are huge turds, but when you have high relative volume and a low float, well, what can happen is you can get on some big, big runs, right? Even on a small account, right? You're ripping 100, 200 shares. You can have yourself some fun with something like this if you can catch it at the right times with the right stuff. Check some of our other webinars if you're looking for the specific patterns for this stuff, right? This is an offshoot of that webinar. Filter your tickers by your best trading setups. ORBs, 9 EMA pullbacks, flag patterns, parabolic reversals. That's a rubber band setup, right? Make sure you don't have like a random setup for each watch list and list, right? You want to kind of start focusing in on a handful of them. The trading day, guys, is broken up into 3 parts. Each part of the trading day requires different patterns. At the open, which is your first hour, you can have short patterns. So we use like an opening range breakout, quick pullback buy, flags, and red to greens, okay, in that first hour. But by the time the first hour is over, my trading patterns completely change. Those 2 main patterns are thrown out the window. They will not work from that 10:30, 11 spot till 2 p.m. That's the consolidation part of the market. That's when stocks retrace. That's when you need bigger and deeper pullbacks. And then end of the day, usually a stock will choose a side. Is it going to break out or down? And then you get a secondary run, and then you're going to have different patterns to trade then. So remember to start matching those up. By the time the market opens, you want to focus on 5 to 10 names. But if you have a smaller account or you're new, a little bit less. The more you have, the harder it is to fully execute. If you ever, and you'll know this, if you ever get paralysis by analysis, where you're like, you freeze, and then you're like, and then you end up chasing something, that's because you got too many names on your watch list. So cut them in half if you're doing that, right? You'll know over time when to keep adding names. I got some friends of mine, my buddy Nate that owns Investors Live. Man, that fucker can watch like 100 stocks. He's a genius, right? It's like he can watch a lot more stocks than me because he's just got the mental capacity to do that. He's super good, right? So everybody has different amounts that they can watch. Names that didn't make your A+ list, but are put on a secondary watch list. Check this list when the market is slower, right? So like after that first hour, after your primary list is gone, like go back through your secondary list and start to see if there was anything that might be setting up. As momentum and better conditions appear on that second list, move them to your primary list and vice versa. After we do all this, say like once the market opens, right? Once the market opens, like right before the market opens, so right around like 9 o'clock, I'll run a scan on trade ideas for gappers in the morning. So that's the second part of our watch list that we always, right, want to run, right? So when you go in right before the market opens, I'll look on trade ideas to see like what kind of stocks are moving. If you don't have trade ideas, you could use like Stock Market Watch or Market Chameleon. So right around 9 a.m., you want to start scanning for these things. Hold on here. And start scanning for these things. And so what that's going to do is give you an idea of, like what's got fresh news out. So you can go on trade ideas here, and they've got like a lot of this stuff pre-built in. And most of it's pretty good. So like you can come in here and they've got like a pre-market, they've got a pre-market tab and all that kind of fun stuff. Hold on here. Where's their channel bar? So you can see here, like they'll have like different stuff here for like after hours. And I don't keep this on during the trading day because it just makes me overtrade. But like pre-market, I'll put this on to see like what's going down. So even after hours, you have like post-market movers, and you'll see like what's moving up or down the most. And you can do some cool things on here. Like they've got all different kinds of scans. You can run automated strategies. If you're using Interactive Brokers, you can hook them up to it and do automated strategies. And you can really do some interesting stuff on here that is like a little bit more high level in terms of, algo stuff. You can basically program your own algos, right? And they can start to run all over the place. But the main thing that I like to do, is like in pre-market, I'll start running these on the up and down gappers to see what stocks are moving around pre-market that have fresh news out. So I'll take these two lists and I'll go through them and I'll start to see which ones have the best charts. So like you see like here, like I have this gappers list. And so like these stocks, so this is from Friday, these were stocks that were on my gappers list. These are stocks that have fresh news out that I can use for intraday trades using a handful of patterns, right? If a stock is a gapper, then guys, what are we looking for the next day? What are we looking for that day? We're looking for an ORB at the open, or we're looking for a quick pullback buy, or a VWAP fizzle, or a VWAP sizzle, so on and so forth, right? Always think about your patterns and then what are the rules for the patterns. Be aware that market conditions can change. Don't force your watch list to work. The worst thing that can happen is sometimes you make a list and then it's like kind of a dud and you start forcing the action. ORB is a trading pattern. I got a ton of YouTube videos on it and stuff. That's our primary pattern. That's our primary pattern that we use at the open. That or a quick pullback buy. I'll get you some videos on it and stuff too. We teach it in our bootcamp classes also. But it's essentially a pattern, and it's a pretty simple pattern. What you just need here is like basically, I'll just find you some examples. Hold on here, buddy. Dun, 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 dun. Boom, 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 boom. Hold on here. Dun, 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 dun. Guys, and keep lists of all the stocks and pictures of stocks you've traded and stuff. It'll help. So like this would be an opening range pattern. One. So like, see this stock gapped up in the morning, right? And you can do, you can use the stock market watch or market chameleon. I like to use trade ideas, but whatever. So I'm looking for stocks that have gapped up 3% or more in the morning, right? So like, see how this thing gapped up 25 cents, right? So it's like a decent size gap, 10% or so. Then what we're looking for, and you need minimum 3 candles. So once it gaps up, you're going to start to build out a range here. So like, notice how you start to build a range, and it's minimum 3 candles. It may take almost the first hour to do. So when you take out that opening range, you're going to buy as it breaks over, and then you put a stop under your nearest MA or moving average or the VWAP, right? And now you get into this thing for the big shred. The reason it's a good pattern is that you'll know for sure, not when the opening, if you just buy the first candle, sometimes they just completely reverse and then the trade is dead. But what happens is if you wait for the opening range to develop, then you'll have a high probability, because it's been holding out and testing resistance. When it finally breaks over, you're going to have yourself a really nice shred, and it's going to be very high probability because it actually built itself and held. Sometimes the stock will just die if you try to buy it the first candle. I never buy the first candle, right? Never want to buy the first candle. But once you get into, once you have a minimum of 3, then you start to know, like, okay, this thing has a chance. And it can be on high, guys, it doesn't matter who you are. I mean, this is Clorox, right? This is a grandpa stock, and you can still do an ORB on them. Small caps, big caps, whatever. A gap up, 1 candle, 2 candle, 3 candles, right? On the 3rd candle, you're going to hit it, stop under the range, and now you got yourself into, a nice shred. And you can do that to the upside and downside. It does not matter. See, this is kind of what you would be looking for on the downside. So you get the gap down, and you need minimum 3 candles to go. Once that opening range sets, you're going to short, set your stop, let her rock. So just a really, really simple pattern, guys. So you get your gapper list. You've got your list that you flag now, and you are looking for 2 patterns at the open, all right? 2 patterns in the first 15, 30 minutes. You're either looking for that ORB, or you're looking for the quick pullback buy. So a quick pullback buy is just a very, very simple pattern. Quick pullback buy is a very, very simple pattern. You're going to get the gap up, but it doesn't ORB, Juan, right? Sometimes they won't ORB. Then what do you do, right? You just can't be sitting around twiddling your dick all day. Well, I mean, that's nice too, as long as you're not at work. You get arrested for that. But if it doesn't ORB, now let it pull back, right? Let it come back to the 9 EMA. Let it come back to the 9 EMA. And once you start to get a green candle to hold, then you want to start watching this one. And as it starts to hold at the 9, you can add it in for the shred to the upside. So you got 2 options. You either gap up and you build an ORB, 3 candles sideways. And if it doesn't do that, then wait for a pullback to the 9 and then go. And so building a watch list, like a lot of times once you build it, you're like, what the fuck do I do with the thing, right? Well, that's what you're doing. You only got 2 patterns that we want to do at the open. So you don't make it too crazy, guys. You got 2 patterns you want to do at the open. The rest of the day is a little bit different. So like, say I like this, I had this Squarespace on my watch list, right? This stock had some nice momentum. So now what I'm doing, you can do this with any type of stock. When it pushes up, if it has 3 sideways candles, then I'm going to ORB it. If it doesn't do that and it pulls back, I'm going to hit it as it taps into the 9. And I need a green candle to hold because, right, you don't want it to just dust under the 9. You want to get the confirmation. So when you get the green candle to hold, then you hit it, and now you got yourself into the trade for the run. So it's just 2 simple things. Push, sideways, go, or it's push, pull back to the 9, hold, and then go. So one you're buying on strength, the other one you're buying on weakness, okay? That's going to cover all the bases. Now, if a stock doesn't do either of those, then you just leave it alone, right? That's no big deal. Like, that's awesome. All right, cool. I'll leave this thing alone. No big deal. And that's, in trading, that's the huge part of it, right? Can I just leave it alone if it doesn't give me what I want, and you have to. So that's the key to all success, right? In trading is just, if you can be selective and wait, build out the list and then wait for your patterns and hit it like when you're supposed to, then you can make money. Where people make their mistake is they get these stocks on their list, market opens, and they're just buying, right? They're buying without a reason. They're buying without a plan. In the heat of the moment, it's hard to have a plan and a reason and all this shit, right? So we narrow it down into very specific patterns, certain types of looks that we know work at certain times. And if you can narrow it down and just wait for that look with the recipe of that look of what you need to see, right? 3 sideways candles or more, pull back to the 9, whatever it might be. Well, now you're giving yourself a chance to not only have a stock on your list, but to actually make money from it. And that is so important. Guys, remember to rank your list to prioritize focus of screen time on names. So like I have my list here on T2000, right? But say it's got like 18 names. Well, before the market opens, like I'm ranking these bad boys, right? Like I'm ranking these ones to see like which ones are the best. How I personally rank them is I will look and see what my probabilities are on that type of stock, the price of the stock, the float on the stock, but I always give credence to stocks that are well known that I've traded before. Like, we had, RH is one of our top stocks to short on Friday. And the reason was I know that from judging from the past, this stock has a history of having volatile moves, right? So when it gapped down on its earnings, like it opened at 115, but we kind of knew that it was going to follow through because I've seen it done on this stock numerous times. This stock's been dusted on and off for years. Like when it trends down, it really trends down, and when it trends up, it really trends up, and it has a history of making, right, like large moves intraday. So like those are the stocks that always rank higher. And on T2000, you can drag them, right? So you can drag them, and so now you can start to rank them, right? Number 1, number 2, number 3, number 4. Now we're cooking. All right, guys. Guys, never add, stocks to your list that don't fit your personal criteria. Like we have a chat room, and I get ideas from my chat room all the time, but I won't add it just because somebody talked about it, right? Like if it's something that fits my style and it's a good idea, I'll put it on my list and watch it and wait for my own pattern to develop. Well, you don't want to just jump into trades because somebody else is jumping into them. Nobody's going to be able to trade as fast as the guy whose idea it is, right? They've planned it. Their fingers are going. They know exactly what they're doing, the context of it. When you don't have that, you're on delayed time, right? You're reacting to somebody else. And when you're reacting to somebody else, you're beholden to all sorts of funny business that can happen in the markets. Better to just run these scans, do your homework, and trade a handful of patterns that work, because the patterns aren't that complicated. It's just more a matter of repeated rinsing it so many times that you can do it without thought, right? You can do it without thought and by managing your risk. Remember that volume equals continuation, right? I always filter out the stocks that have dried up on volume. They end up developing spreads. They have less follow through. You end up losing edge on it. You need volume, expanding volume to really, really get exponential. Guys, the reason that 95% of traders blow up their accounts is they got poor risk management, right? They don't put their stop losses in at the right spots, or they don't even use them. So there's different types of risk management though, right? Poor risk management is, of course, just not using the stop loss, but also, right, you have to understand your personal patterns along with the patterns of stocks. Bad timing the entries and exits. People that chase tend to always lose, right? Anybody here a chaser? Like a stock starts to go and then they buy it, right? Versus hitting it as it's starting to go. Me too. We're a club, Patrick. I on and off chase a lot. It's a club. It's like AA. Hello, I'm Kanal. I'm a chaser. And it happens, but you know what? Chasing doesn't make you bad. It just means that you're an excited guy, right? It's kind of a good thing. We just don't want to do it in trading. You know, a lot of times when you chase, you die. That's what you just have to put on a sticky note. That's what you got to put a sticky note on your computer. You chase, you die. Well, shit, nobody wants to die, right? So don't do it. So that's really, really important. Trading psychology influence on trading. Risk management has two parts to it. One is managing the capital risk on a trade. The other part is trading your personal patterns. We all have things that get us in trouble. Some of us are chasers. Some of us overtrade. Some of us are lazy. We don't do our homework, right? We just turn on the computer and go. We all have personal patterns that cause us losses. So identifying those personal patterns that are causing us the losses is huge. Identify it, know it, figure out the triggers, and when you see it, right, step away. Like if you haven't prepared for the day and you know that the last few times that's really cost you money, when you wake up late, just take the day off, right? Hey, man, I woke up late, I got the day off. I do that shit all the time, right? It's like, oh man, guys, I even tell my own chat room guys, man, I overslept, I'm not ready, right? If I'm not ready, no trade. So figure out where your sweet spots are on your mental risk and then work on getting those better, but just in the beginning, just stay away from them. If you do X, Y, Z, no trade. Poor preparation. The preparation I showed you guys today, you got to do it every day. And frankly, it's going to take you a little bit longer than what we just went through. You know, I only did a handful of stocks on each single one. You got to go through all of them. Over time, when you get the repetitions, you'll be able to go through my whole routine in 20, 30 minutes. That's not too bad. That's not too bad. In the beginning, it might take an hour or two, right? Because you're going to be a little bit slower at going through them. But the more times you do it, in a few months, man, you'll be getting through that thing in 30 minutes. You're going to be feeling good. You have a pulse on the market. You have a hot watch list. And you will be building the mental repetitions on these stocks and understanding how they move and why very, very quickly. Think about this in terms of your learning. If you're brand new, if you go through 1,000 charts on your TC2000 every single day, how many charts will you have gone through by the end of the year? 200,000 charts. You're telling me you're not going to spot patterns after you've gone through 200,000 charts? I don't care, you know, what your brain power is. If you've gone through 1,000 charts, you've gone through 1,000 charts, and you last a year, you're going to have so many repetitions. You guys are going to kick ass at understanding chart patterns, knowing when and how and why they move, because, man, there's nothing you can do for 200,000 reps that you're not going to be good at, right? Guys, our boot camp is designed as a solution for retail traders to combat all of these weaknesses, all right? As, by the way, if you are coming in, right, you know, if you're coming into our program and stuff, you want to talk to some other students, man, I got thousands of students that love us. But guys, if you're going to come into our next boot camp and you need our scans on TC2000 and the layouts, just type in your phone number and email, and I'll make sure these guys get them to you. On TC2000, I can basically send you all the layouts and scans and everything. So all our students, they have access to all this stuff. They have access to all this stuff. So if you want yours to look exactly like mine, you want the same scans, basically I just send them to you, you open them, and guess what happens? Your computer looks like mine, and then it's going to, you know, you can just filter through this exact routine every single day. So put in your email, phone number. If you guys are coming into the next boot camp, and it starts, it starts what, April 7th? So I think, yeah, we're starting April 7th, I believe. That's Tuesday. So putting it all together, guys, this is one of the best professions out there if you can get it going. The key is this. It's not easy. This is a job, right? It's a job. It's no different being a doctor, a lawyer, a teacher, an accountant, an engineer, whatever it is that, you know, you do. It's a job. So that requires education, training, mentorship, right? You name me one elite performer that didn't have an elite coach pushing him. It's very, very hard, right? I mean, sure, there's examples of it, but most people that are really good at their jobs, they had somebody buddying in, taking them under their wing. And that's how trading is too. It's a job. But the thing is, like any job, you can learn. You go through the training, you go through the process, and then it's up to you though. Just because you've been trained doesn't mean you're going to reach the top of your profession. It just means you're in the profession, right? Now it's still up to you whether you're good or bad, but that's where having a really good mentor and coach comes in, because when you get the push, right, then that's huge, right? Josh, who's answering these messages, Josh came to me when he was 16 years old. Imagine he's got nice fucking parents, right? Who buys him a boot camp class when they're 16? But he's 22 years old now. He's been with me 6 years, but he's got a skill that'll last for a lifetime, and he's still a young man, right? We give you a foundation and tools for a successful trading career, but you still got to act and put it together. Because I'm a damn good coach. You can see probably I get excited about this stuff. We teach class 4 days a week. And I bring the heat every single day. That's one thing you can always count on is death, taxes, and me shouting at the computer 4 days a week. That's all you might be able to count on, right? Shorten the learning curve by staying with us. Guys, we give our students lifetime access. You can take boot camp class as many times as you want. On April 7th class, I will have students from 5 years ago coming into class because it's just part of what they do. It's just part of what they do, and they come into every single class. They know Tuesday, Wednesday, Thursday, Sunday, I'm on that tube, and I'm right with you A to Z. So that's always going to be a big part of what we do. Our 60-day class is 28 live classes. Each one's going to run about an hour and a half, sometimes a little bit more. All right? Classes are recorded and archived for playback. You have question and answers every single class, quizzes, homework. Guys, it's a university style setting. I promise you this, you cannot learn trading from watching DVDs or streaming videos. This is a job, right? Imagine somebody says you can be a doctor by watching a couple videos. It don't work like that, right? It doesn't work like that. You need live classes. You need somebody shouting, hooting, and hollering and adapting as market conditions change, right? Market conditions are always different. Some guy makes a DVD from 6 years ago. How's that supposed to help you now? We need to adapt day by day. Things always change. That's why I give lifetime access. That's why I give lifetime access to all my students. Awesome part of boot camp that people love. We do these market recaps at the end of days. We recap all the trades. During boot camp, we have live classes, but I'm trading in front of the students during the day. We have screen share and a chat room. And so I'm trading in front of all our students during the day. And, that's actually, that's the fun part. So you have your book knowledge. That's the class, right? But then how do you tie the book knowledge to what's really happening in the markets? Well, how you tie those worlds together is somebody's got to get on screen share, and we have a chat room and stuff, and I trade in front of everybody all day. That's where you're going to tie in some of the stuff that we do, and that's where you're going to take your learning to the next level. So in the morning, I'll put a link out to chat room, and we have a Slack channel at night for the students so they can ask questions and all that fun stuff too. I'll put a link out for screen share. You guys get to watch me trade. Then at the end of the day, and everything will be recorded, I recap the trades. Patrick, you won't need that intro to trading course, but you can have it. It's all in the first classes of the boot camp. Trading simulator. On TC 2000, there's a simulator in there. We have a nice, easy way for you to collect the trades and screenshot them so that other people can look at them. And then, of course, we make trading plans, like a business plan. And then, we have a student community, right? A chat room where you guys can hang out, chit chat with each other. We got a 200-page course book that is This is the dun, 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 dun. Right? So anytime you go to the bathroom, anytime you hop on a bus, anywhere you go, you're going to take this course book with you. And this, everything that's in our classes will be in here too. Some people like to watch videos and watch things live. Some people like to read. So we've got that too. Now, for those of you guys that work, that can't day trade, we spend 5 classes on how to do part-time trading. So my mentor, Paul, he's a swing trader. He holds stocks from 3 to 5 days or 2-3 weeks sometimes. He's going to come in. He does 3 classes. I do 2 classes on swing trading. On swing trading. How can you trade while you work? How can you trade smartphone, tablets, right, and do longer trades? Swing trading is awesome because you do your homework at night, and then you're just executing a handful of trades every week from your phone or wherever it is that you got to do. You'll still need access to charts. You got to make sure it looks good, but you don't have to. You can't day trade off a phone. It's just too fast. But you can definitely do your swing trades and your crypto trades and all that kind of stuff from your phone. Guys, we have a special on this, $19.99 tonight only. We do have payment plans available. Omar is my guy. Omar's my guy. His number's over here, 972-841. That's his email. So if you guys want to ever reach out to him, you let me know. But type in your phone number into the question section if you want this special deal. If you want this deal, and we'll make sure to get you on. I'll send you out your course book tomorrow morning, and I'll get you your TC 2000 layouts tomorrow also. You'll have all the scans, all the layouts, everything you need. I'll get that course book out too. You'll have it in a couple days, and you can start shredding all our stuff, even our past boot camps, guys. They're all on our website. So like when you come into boot camp, you can come in and, we have like all the classes here listed out, everything you need, from flashcards to everything. And you can even watch all the old boot camps. So it's kind of fun. You can come and start watching videos pretty much right away and get this party going. So guys, type in your phone number and I'll make sure to have Omar call you. He'll do a trading consultation, walk you through and give you a demo of what we do on the back end so that you guys are ready to roll. He's one of my best friends from, grade school. So you can call him, his name is Omar, but, lately he's been calling himself Omer to sound more professional. Who knows? But you can call him Omar if you want. If you guys ever need to reach me, Twitter, Instagram, I'm Canal00. And by the way, guys, if any of you guys ever want to, chat with me or email with me, I'm Canal at bullson.ws. You can hit me up anytime. You can hit me up anytime and chit chat. That's my cell, so don't try not to call me at weird hours. I know who you're talking about. It's usually the Indians that always call it the weird hours. Probably because I'm Indian, but the Indian people call me always at the weird hours. Hello, Kunal. Brandon, I text you back so many times. You lost your fucking mind. You know what? You may get a lifetime ban for that. Just for now. That's my cell. You guys know what's going on. Brandon, I don't want you to come over. You're too much of a pain in the ass. You've been bothering me. I said I'll give you a date when I give you a date. But by the way, everybody else except Brandon will have summer boot camp at my house in June. Everybody is invited except Brandon. By the way, guys, I do a pre-market YouTube in the morning, so you guys can come on and do that. But yes, that is true. I do a summer boot camp at the house. You guys are more than welcome to stay at the house and come in and have a little fun. We usually keep it like a week. It's a little bit crowded. I only got 4 bedrooms, but we put some bunk beds in and we do it salute your short style. So if you finish up boot camp and stuff, you're definitely eligible to come in and do that. I have a few of them, so you guys can always come in, and it's actually kind of fun. We have fun, and we basically what we do is we trade all day, and then we have a little fun. I live on the beach, so we'll go to the beach, have fun. I got a boat, all that fun stuff. We'll cruise around, and we come back at night and do homework and get ready, and it is pretty fun. Julius, if you fart a lot, that's totally okay. Let's open this thing up to some questions. And by the way, if you guys just need that trading consultation, make sure to put in your phone number. Mikey, I got you. Patrick, it will be a pleasure to have you in class. It'll be a pleasure to have you in class. Good, 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 good. Cool. Ryan, I got you too. I'll put you on the list. Good. D-Money, I got you on the list. Cool, cool, cool. Let's open this thing up to some questions. Derek, I got, I'll have Josh get a handle on that also. He'll get you all that stuff too. Derek, just let Omar know. He'll get you all that info. Make sure that you're on the list. I'll make sure to send them out. He's got like a little spreadsheet with everybody's usernames. Cool. Let's open this thing up to some questions. And I appreciate you guys coming in, hanging out as always. It's seriously a pleasure. I've been doing these webinars for a lot of years, and I do love having you guys in here. Let's open this thing up to some questions. Do you recommend that we purchase trade ideas? I don't think you're going to need it for class yet. So, if you choose to use trade IDs or something like that, we've got time for that. But I'd keep your costs low at this point. It's redundant with some of the other stuff we do. It's awesome, but it's also, there's a learning curve to it. Sweet, 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 sweet. Is bootcamp class good for people with jobs? Yes. So class is at 8 p.m. Eastern time, Tuesday, Wednesday, Thursday, and then Sunday we do 6 p.m. But everything is recorded. I got a lot of students in Japan and Europe, and they're watching the recordings. And then what you can do is you just give me a call or send me a text or an email, and you guys can hit me up with really any questions you have, and I'll make sure to answer you promptly. We have like a Slack group for the bootcamp class in specific, so you can also ask questions, and we have other moderators and stuff. So don't worry about if you have a job. I would say 99% of our students are going to be employed in some manner, right? I mean, what are the odds that somebody just happens to have some money to trade, has no job, and also a lot of time on their hands? That's the perfect storm. That'd be nice. Hey, Justin Thomas, what's going on? Go MSU Spartans, baby. And the Detroit Lions are winning the Super Bowl. I hope in my lifetime. Navi, what's going on, baby? Austin, what's going on in Atlanta these days? What else? Cool. Hold on here from Ryan. How long does it take to get charting patterns down? So that's a really good question. So somebody's asking guys like, how long does it take for people to get like the patterns down? It's just more of a matter of repetition than anything. Like say you spend 2 days a week at this and you like try to practice a pattern a couple times. Okay, like your learning curve may be say 6 months or something because like you're just having a handful of repetitions. But like what if you're attacking it every single day and studying and looking at 1,000 charts every day? Well, your learning curve might be 4 months then, right? Or something like that, right? It could be shorter. And even by that time, just because you've learned it doesn't mean you're going to be making a bunch of money. It just means you're moving to the next step, right? Recognition is the first step, but then execution is the second step, right? Recognition is important. And then, from execution, right, we still have, a time period where it takes to excel. Think about like if you're like a doctor, you go through med school, you go through your residency, and you're a doctor now. You're not like the best doctor in the world. You're just a doctor, right? You still, you have the skills, but you still got to go out and hone them to get really where you want to go. So even at that point in trading, like where you're saying, hopefully we want to get you to a point where you can make, say, $100 a day consistently. All right, so now how do we build on that? How do we systematically build on that without taking more and more aggressive risks? We want to do that systematically by just building up over time. Trading is 95% mental. I wouldn't say so. Yes, there's a lot of mental stuff, but it's also about having an edge. It's also about having an edge. An edge is more important than anything. Do I actually have a trading system that has an edge, right? What is my edge? Can I define it? And then from there, once you have that, then the rest is mental, right? Can I execute? Can I recognize and then execute, then excel? Hey, Nirav, where do you live? Mr. Patel, how are you? Suchale. California. Nirav, most of our students, they're going to use either like Interactive Broker, Speed Trader, Ameritrade, E-Trade. We'll talk a little bit more about brokers during class, but those are kind of the main ones I've seen people use. Yeah, Julius, the recaps will be starting. I got to add a bunch of recaps to the thing because I had a few days off. I had to go visit my uncle on Friday. We'll keep them going for a while, Julius. Hey, Patrick. Patrick saying TC 1000, silver, gold, platinum. I'd probably go with the gold. Good. Anybody else got any questions? Where is that picture in the background? Picture in the background. These are my parents. That's my sister. This is in Bali. I think we were in Bali for a few weeks, a couple of years ago. Bali's a pretty cool place, man. It's like a big jungle. Federico, what's up, baby? Should we avoid shorting stocks if the indexes start to go higher from tomorrow? I would, if the indexes are flying, you don't want to just short stocks blindly, but if you had like a pattern that was emerging on a fresh stock that had like some type of news out and then it was showing a pattern, I would still take it, like an RH type of setup. Cool. Anybody else? Hey, William, we'll make sure to give you a call tomorrow, too, of course. Naveen, of course. Sonny, what's up, baby? I got you on the list, too. Oh, man, we got a lot of people from Atlanta. Mr. Thomas, Austin Crawford, Austin's from Atlanta, too. I'll hook you guys up. Pretty much any city we have, we got students we can partner up, and you guys can hang out. Try not to get in too much trouble. I know what goes down in Atlanta. All sorts of funny business. Is your book online? Nope. You can't learn trading from books. I don't think so. I've read 1,000 trading books, man. You know what trading books are good for? If you got insomnia. But if you can couple it with, a program, I think then it can help, right? It's a supplement versus like I'm going to use it to figure out my stuff. Yeah, Patrick, we can get you enough content. We can get you on the back end of the site so you can rewatch this last boot camp. So yes, if somebody asks if we sign up tonight, can we start watching the last boot camp? Yeah, we'll start you. You know, once you're on the back end, it's all there. You're good. Anybody else got any questions? Oh, Juan, Mr. Bogado, ¿cómo estás? How accurate is Google Trend to find out the trend of small caps, mid caps, large caps? You know, Juan, I haven't used Google Trend to trade before. I mean, I'm sure there could be some uses for it, but it's not part of my process. You know, so I can't say like with like a statistical certainty whether it's good or bad because I have no expertise in that particular thing. I haven't found the need to use it, but it does not mean it wouldn't be awesome. De nada, amigo. Coo. Anybody else? Speak now. Oh, hey, lick of balls. I just realized that was a joke you have. You know, consistency for me took much longer than most people because I'm a stubborn bastard. A couple years. More than that, actually. By the time I started, I met Paul, might have been more than a few. I took some breaks in between, so I had to go get a real job, though. Awesome. Anybody else speak now or forever hold your peace? Going once. Going twice. So, adios, muchachos. Adios, chollos. Peace in the Middle East, my friends.